Good morning, traders. This is Michael coming to you from GammaEdge on Monday, January 6th with our pre-market morning strategy and briefing session. As always, the three pillars here at GammaEdge are sentiment, structure, and trend. And we'll start with our market trend model. It has been updated in the market trend model game plan. Make sure you're checking all the commentary. We did see a reversal on Friday back to the upside in our shortest term CT, which is the bolded white line. This is our instantaneous CT. This indicates that you should be getting in motion on the long side, at least with some sort of progressive exposure. And we are now above the railroad tracks, which is our 1 to 3 day look of the overall market trend. Longer trend, obviously you see the wide red below cyan, and that's our longer term look of the colored ribbon. And obviously that is still in a significantly bearish state. Now, as we are starting to enter the ribbon, we'll look to see if we're fail very quickly, or if we start to continue to consolidate and move from lower left to upper right through the ribbon and emerge out the top of the cyan, which would change our shortest term look to a bullish state. With an overall bearish longer term look. So cautionary progressive exposure is what is suggested at this time with the market trend model. Looking at the SPX all expiries turned on. The 6,000 level, obviously COI and PGEX, extremely important on this larger 30,000 foot view of the overall option structure. And this is a downside 5,900, which we spoke about multiple times. Last week was a supportive area that continued to hold. We did dip below it a few times, but on a technical analysis and option structure standpoint, we held it fairly well into the Friday afternoon session. Transition pretty narrow, which is good. That tells us that there's certainty in the market. And obviously we're call dominated, so the expectation is that price appreciation can continue if we do see the overall structure continue to move up. Zero DTE. We've outlined, we've talked about the game plan, our drunken sailor range. We have extensive commentary in the SPX game plan. Make sure you check that out. Obviously, 6,000 is a confluence of the 30,000 foot view of all expiries as well as zero DT heading into today. We've talked about this fear contribution decreasing because due to the in the money puts there becoming out of the money and the possible monetization of those. And the possible monetization at the open, depending on where we gap up close to that 6,000 level, as call holders want to be rewarded for their risk over the weekend, and then some sort of pullback possible to the top of the drunken sailor range or inside the drunken sailor range to give us an opportunity, if everything looks good, MTM, Vol M, Vol D, for the possibility to enter a trade back up towards 6,000 and through 6,000. Obviously, we're anticipating these in the money puts up here to still provide a slight overhead headwind as we move up through those, unless we see a significant move through these and we see OTM call speculation coming in. So above 6,000 obviously could see a move towards that 60-15, 60-25 level. Obviously 60-50 to the upside would be a significant extension, and we'd need to see the bulls completely try to run the table to the upside with the out of the money call speculation. The delta balance, as you would expect, improved, but then we do see some sort of weakness coming in after the first few days here. But overall, for the short term, we see the delta balance improving. You see it move up towards the +1 level. And then we see the drop in the green dotted line, which is our left-hand plane. Obviously, those are the in-the-money calls, and we see the right-hand plane OTM call speculation stay above zero. So we'll continue to watch this day over day for an outlook for the rest of the week. GEX ratio, obviously, with the move up, we did see an improvement. Obviously, this is short-dated gamma. So calls going into the complex on the short-dated structure are now overriding the puts. We're above 1, but not a significant move up as you would anticipate from that large move. So we'll have to continue to watch this. If we see this GEX ratio continue to improve, incrementally moving above 1.2, 1.4, and then towards 1.6 with the price appreciation, then that would give us a little bit more confidence in the possibility of moving above 6,000 towards 60-50, and then obviously towards possibly 6,100. Qs improved pretty significantly and are remaining bullish for the rest of the week. You see that +1 delta balance peg there with the blue line, and then we do see the left-hand plane right-hand plane staying above zero as you would match this with the SPX as we see those dropping below zero on the left-hand plane there. So staying bullish for the rest of the week, which is also confidence that we could possibly see a move up in the Qs. SPYs remaining bullish also, pretty much matching the QQQ, staying above zero on the delta balance and pegged at +1. So overall on a bullish look for the delta balance. The left-hand plane, or sorry, the left-hand plane obviously moving up toward above 0.5 there, and the right-hand plane staying above zero, which tells us that this is remaining call dominated through the rest of the week. DIA above zero, still weak for today, but then we do see a projection above zero for the rest of the week on out in time. So we'll continue to watch this again day over day to see if that continues to improve. And if you followed us in the VIX trade or Paul in the VIX trade, basically it's doing exactly what we would anticipate and want to see for our overall trade. Delta balance dropping below towards -1. We see the left-hand plane and right-hand plane bouncing around zero or below zero. So we continue to see the VIX come down and projected that it will continue to weaken. So we'll watch that again day over day. So game plan for today. As always, I've raised my time frame and drawn some areas that are important, at least on a TA and gamma delta level. Drunken Sailor range is drawn here at 59.75 down towards 59.10. This is the pre-market SPX here. Obviously, 59.90 here at P-Trans. This is all the expiries turned on from the Friday TradingView script. And then 6,000 plus gex up there. It's going to be extremely important to get over. It's going to be a very large hurdle. So my anticipation would be the first test. We'd most likely see some sort of monetization in calls. If we even get up to that point, probably some sort of pullback towards 59.90, possibly 59.80 as call monetization occurs. And then we'll see how this kind of all shakes out towards the top of the Drunken Sailor range of 59.75. That would be scenario A. Scenario B would be just a straight move through this 6,000. We see OTM call speculation come in and just jump on the boat or jump on the train for 0DT, and we drive up towards this 60.25, 60.30, which has been on a longer term time frame an important TA level there, where we saw some sort of breakdown from that previous upper price action, and then we saw a retest and then another failure there. So that would be an important level that I would watch for some sort of stalling on a TA and gamma standpoint or gamma delta standpoint if we do not see a significant amount of OTM call speculation. And then the third probability, which is I'm putting at the least probability at the moment, would be a move up towards 6,000 or not even really making to that point. We see some sort of monetization. We drop down towards 59.75, chop around here, and do not see OTM call speculation come in or bull step up, and then we start dropping into the Drunken Sailor range, which below 59.75 anticipate a test of 59.50, and then we reevaluate as we're in the middle of the Drunken Sailor range and could be slightly directionless within this overall range. So scenario C for me is least likely at the moment. Scenario B is kind of the high probability that we test up here and then get some sort of pullback and then kind of evaluate the top of the Drunken Sailor range and see if we see bulls step up here 59.75 and drive us back up. And then if we have multiple retests of this 6,000, if we're able to get through that, we'd be watching the vol-m command intraday for positive call and put centroid slopes, and that volume that is transacting above where spot price is for that out of the money call speculation. So with that, I hope everybody has a great day. Again, no P2P trades for today. TC3 is still off. We produced a significant amount of individual equity content in the single stock discussion. We're really trying to focus on that for individual equity traders. Make sure you're checking that out. And then checking out Taylor's morning scanner that he'll post in his trade log session that allows you to really drill down with our individual components to find the high probability setups for individual equities. So with that, everybody make it a great Monday, and we'll see you in the Discord in a few minutes. Thanks.